Hello and welcome back to today's episode of Crypt. Oh my god, the market is pumping. It's a beautiful Monday. Let's just dive right in. Out of the gate, we have some news around the self-healing, the self-regulation of the market. I've talked so much about how these coins are mispricing as they launch at market, and it's really caused retail to be viewed as exit liquidity with people dumping into these new token listings, and it's just been a total bummer. Now, this post here by Cobie, a prominent poster since the early Bitcoin era, he made a lot of his money in Bitcoin selling drugs on the Silk Road and has since then been quite a wonderful gentleman to follow and just to keep in touch with. But here he talks about one of the most unspoken issues that we see in our space, which is the market maker relationships. And he's talking about these companies at launch like a Cross Token, Dexie, Kava, and they all just have these immediate sell drop-offs, right? These are something that is fairly rare because you're seeing this within a single time frame window, which means one person is doing it at a very egregious time. Here on the bottom, you can see volume, right? And even here with Quick, you have some buying, some selling, and then suddenly this giant, massive sell. So what the hell is going on? And this is something I have dealt with very closely in working with projects, in connecting them with market makers. Now, a market maker's functionality is to pad the order book, to basically look at the price, look at where it is, and pad some buys and pad some sells so that it doesn't move with high volatility. Obviously, this is the exact opposite. Now, one of the reasons they do this is because they often enter into a loan agreement with these projects saying that, hey, you give us, let's say, 1 million tokens as a loan. We will trade them, and at X date, we need to return you 1 million tokens. Now, they can sell this immediately and dump the price and eventually retrade it back to that 1 million token purchase and be like, hey, we destroyed your chart, but here's 1 million tokens back, and it's like the worst deal in the game. Now, that being said, a very cool market maker who has come out and has often said our pitch is really the opposite of what these other MMs do is called CoinWatch, and they basically go to companies and say, hey, we're very transparent, we have a dashboard, we do a lot of data, and you know exactly how we're working together to benefit your token. They also work in a better model. That is, if they produce upside, they get more capital, they get more money as a result. Now, they are responding to this call out with a new dashboard that is very refreshing and interesting to see. And I say this because the market maker problem, while it is ubiquitous and so many tokens experience this, it's not something that people talk about. It's not something that founders really get together and they share too openly, but it is a problem that we see time and time again. And I even see a lot of teams use market makers that I do not like. I say, hey, these guys rugged companies I've worked with before, and due to some either small investment or just like a cheaper rate, they go with them anyway. They end up destroying their entire project for saving a couple dollars. But CoinWatch came out today and said, we're announcing CoinWatch Track. And it's this very fun new dashboard for founders to really understand what's going on with their market makers. And another reason a lot of market makers can do what they want is because founders in cryptocurrency companies, they're tech builders. They want to build the software. They want to keep scaling their product. They don't want to deal with the minutia of secondary markets. But secondary markets are free markets. There are sharks in the water that want to eat you. There are traders out there that could care less about your technology and just want to take profit from your hands and move it into theirs. And this is a really healthy approach from within the industry to begin to create more transparency around how many tokens are out there. We often see the token float that goes either to the community, to the airdrops, maybe even to the investors that are locked. But many times, and it is all too often, that we actually don't know how many tokens the market makers have. They're technically free floating, and what their agreement is with those market makers. Are they in one of these crappy loan situations where they can dump everything and come out just fine? So this is all very exciting to see, and this is a move towards a much healthier ecosystem where token investors and exchanges should really be demanding full clarity and transparency from these token issuers. If we can't understand what the full token economics look like, well, then that means there's information asymmetry, and somebody else who has that information is going to be profiting off of it. So we do want retail to flourish. That is the way that cryptocurrency becomes an attractive investment and an exciting technology. It's something that we really fell victim to with the previous SEC that didn't want revenue generating protocols and really pushed people farther away from regulation in the United States and into these opaque and often just like meme coin baseless assets. So that's a fun thing to see, very good for the overall industry. Now, one thing that's absolutely nutso right now is the NFT market. And like, holy moly. I made a tweet earlier just commenting on CryptoPunk, said 140K for a punk is ridiculous. Send these to the millions, right? Within days, we've added $40,000. I mean, that's a substantial percentage, right? We're looking at 20% over 30 days, 16% in the last day alone. And of course, following close behind it, Pudgy Penguins. It's really hard to argue with their dominance. I mean, their meme coin is basically back at airdrop levels. And, you know, I'm like an idiot and I sold it at the bottom. So feeling kind of silly there. But the Penguins themselves at 16.2 ETH. Prior to the airdrop, they were trading at around 20. So that was like very much a high. And people were doing that because they were expecting an airdrop. But this is very cool to see the Pengus coming back to their 20 ETH previous high, because I think they can crush it. As I mentioned, they have deals all over the place and they are going to become a very ubiquitous brand across the country and the world. We wrote off these NFTs as this explosion back in the day. That was just a bubble that popped. And I'll be honest, in the beginning, I was like, well, they're less liquid shitcoins and they didn't make as much sense to me. But now I really do grok that there is a collector bug that sits within humanity that people just like to collect. And at the end of the day, an NFT, at least it is something that you have, right? People do use these as community builders. Both the CryptoPunks and the Pudgy Penguins are major profile picture signals on Twitter, on X, and things like that. So I think when you're looking at the blue chips, these NFTs are going to perform phenomenally well. They're very much a laggard. So to see them pick up is like, ooh, are we getting into like a hot market? But it's also very rewarding to see that these things aren't complete vaporware. So that's pretty cool. And I mean, look, 24-hour sales, 87, 131, like that's nuts. Little Pudgy's 337. And we see it here with Headline Crypto. I think this is the most spectacular CryptoPunk sweep we've seen since 2022, maybe 2021. A sweep is when a single buyer basically buys all of the assets, the NFTs that are at the floor price, basically saying, we don't care about traits, we're just collecting. And this was 76 punks were acquired within 5 hours for approximately $13.5 million. Now, I know that number sounds crazy, but the CryptoPunk is historically important. It was the first iteration of the NFTs. These were given out for free early on. Again, just proof that curiosity does reward you in life, and you should practice being curious and then acting upon that curiosity. Now, Pudgy Penguins continues to crush as well, right? Pengu is coming to San Diego Comic-Con, so they're leaving the crypto space broadly, and they're just trying to make Pudgy Penguins a brand across the world. They're in video games, they're in Walmart plushies, they're in Pez. They just want to be a presence that you cannot ignore. And of course, their emojis on Instagram are like wildly popular. So even if people don't know that Pudgy Penguins is a crypto project, most people have actually seen the brand through some sort of GIF or emoji or whatever. And that's pretty cool. Go Pudgies. I mean, they're kicking ass. Now, we look at the NFT market cap and it's like, holy moly, up and to the right? We have the 24-hour trading volume going up 200%. So this is probably NFT funds that are just fully convinced that we're in the bull now and now is the time to go. And it's likely, you know, these collectors, these people that are more serious, that are taking it to a professional level, that are signaling all in on NFTs. So very fun for anyone that bought one in the last cycle and has been sitting on that thing forever and a day. Now, lastly, I'm going to sign off with updates from the Roman Storm trial because it keeps getting more and more interesting. And this is David Z. Morris from The Rage, and he's been really great. He is in the courtroom every day and giving us sort of a download. And what's fascinating is, again, what he's citing today's day in the trial actually came from X.com. Again, the trouble with, you know, presenting a case against somebody that built a crypto system is that we can get on chain and we can do our own research. And it just seems that the prosecution did not research this quite as well as they should have. So David talks a little bit about this revelation that I actually saw Friday or Saturday or wherever it came out. But Vano, who builds the MetaMask wallet, I'm sure many people are familiar with this. She is also a major sleuth. She gets in with Zach XBT, and they do a lot of on-chain surveillance and cybersecurity and retroactive clarity, whatever you want to call it. But she had this really interesting thread, and this came back to the core of the trial today, which is that the first witness in Roman Storm's trial is this woman, Katie Lynn, who I've already gone over this. She's expressed that she was phished on WhatsApp. Now, it gets kind of fun because as you go through this, you know, Vano starts to actually look at what does this woman have to do with Tornado Cash? And she goes a little bit into this Asian phenomenon called pig butcher scams. There's actually a great Korean film that I watched on the plane recently about a woman who gets scammed this way. But the long and the short of it are that they kidnap people, and the gangs in Asia, predominantly China, do force them under gun and under threat to their family to conduct these scams, to call people via WhatsApp and scam them out of their money. Now, she finds that she is scammed, and then later on, this poor woman goes back to a crypto recovery service and pays them even more money to do this investigative report. Now, looking at it on chain, Tay finds that her money is already gone. There's nothing she can do about it. It's already been lost. But these investigators add fuel to the fire by convincing her that no, there's still a chance if she only gives them, right, this sum of thousands of dollars. And what they do is they tell her to email Tornado Cash. Now, this has nothing to do with Tornado Cash. None of her funds even go through it. So this weird touch point is how Tornado Cash gets confused in all of this. And it's fun. I highly recommend you click on Tay's feed. It will be the last in my sources on the description here. But, you know, she goes in further and further and actually finds out where these assets wind up, right? Armed with the address on the seizure, I easily found our victims' transactions by utilizing one of the most technically advanced on-chain forensic methodologies, crackhead explosion tracing. So you just gratuitously explode out in all directions until you find what you're looking for. And she's been doing this for a very long time, finds all of the wallet addresses, watches them launder the cash, and lo and behold, they don't go through Tornado. So the whole thing is like, why the hell is this first witness against Roman Storm having nothing to do with Tornado Cash? She has this heartwarming story, right? Everyone feels for someone who lost their life savings. But lo and behold, the FBI lead of crypto transaction surveillance gets on stage today and says, you know, we actually didn't trace any of this back to Tornado Cash. And now Roman's defense attorneys are actually pushing for a mistrial. They're saying, hey, you keep calling people to the stand and they have these heartfelt stories, but like they have nothing to do with Tornado Cash nor the core thesis of this trial. So a mistrial would be phenomenal. Again, this trial right now against Roman Storm and Tornado Cash is about the capacity for a developer to write and deploy public code in an open source mechanism, not making any profit, right? If Roman had been making money off of, let's say, the North Korean money laundering that went through Tornado Cash, this would be problematic. But he posted the code to the internet and he basically let it live its own life. Other developers took over, they contributed. I mean, people can operate Tornado Cash. Again, it is a smart contract on top of the Ethereum blockchain network. So is Ethereum at fault for hosting the code that accesses, you know, Tornado Cash? Is somebody that's making a ghost gun and they put it on the internet, is the internet hosting service responsible? Is it the DNS servers? Is it Verizon for hosting the packets that come to your home that allow you to download the ghost gun prints, right? Where does it stop? So this is so fundamental to privacy, and this is probably the most important of the regulatory legal things going on right now. Roman will keep going throughout the week. Wild that one of the jurors had like an emergency tooth decision, so they halted the whole trial for the moment, but it's looking positive, and it's looking like the Southern District doesn't have a very strong case. In fact, it's strangely weak, to be honest with you. So best luck to Roman Storm. I hope you get out there, and power to our First Amendment rights. With that being said, enjoy the bull market. If you have some NFTs out there, like, fuck yeah, let's do it. Stay safe, don't overlever, and I'll see you tomorrow.